hand over to Craig, if that's okay, and he can enlighten you on new age banking.
My name is Craig Donaldson, I'm the CEO of Metrobank. If I just set the scene now, ask questions as we go. Don't wait until the end. I will leave time at the end for questions. But if you ask questions, then I can change the presentation to fit with the direction of travel you guys want to take it. So please shout out. I am not easily offended. I'm a northern boy who supports Sunderland. I am used to pain. Please feel free just to shout out. I call this slide, forgive me, I've used a little bit of a stock presentation in creating a level playing field. We thought it would act as a springboard form to questions and where we take it. And I just love this photo anyway, so forgive me, I like to use it. So, it was working. So, what is Metrobank? Metrobank was the first de novo high street bank in over 100 years. We're based in Commerce Bank. Commerce Bank was set up by a chap called Vernon Hill in 1973. He built it over 34 years to be the 17th or 18th biggest bank, depending on who you're talking to. If it's him, it was definitely the 17th. And he sold it for 28 times earnings in 2007 for $8.5 billion. If any of you studied banking at Harvard, it was the case study that was always used. How can a bank be loved by shareholders, its customers and its staff? And most banks struggle to achieve one, let alone all three. He came across a chap called Antony Thompson, who's now Adam, where after he sold the bank, talked him into coming to the UK, and I joined them at the end of 08, beginning of 09. We went out and raised the first amount of money, 75 million quid, in the March of 09. In March, literally a year later, March, 5th of March 2010, we got a banking licence. On the 29th of July 2010, we opened the door in the first store. 7 years ago, there was 4 of us. When we opened the doors, there were 67 of us. Today is 2,069. And I'll come and talk a little bit about that as we go. We are 7-day store opening. Our stores are open from 8 AM to 8 PM Monday, Friday, 8 to 6 on Saturday, 11 to 5 on Sunday. Yes, I have said that an awful lot. And actually, that's a lie. Those are the times that the stores are open. The stores are actually open 10 minutes before we say they will be, and they close 10 minutes after we say they will be, because what we're about is trying to create fans. And therefore, when you're open earlier and people turn up and you invite them in and serve them, or if they turn up a couple of minutes late, you say, come on in, of course we'll serve you, blows customers away. I love when you see other people queuing up outside of the banks. You know, when you get there and they go, come on. So we don't allow that to happen. We don't advertise it because that's about the culture of wanting to serve customers. We of course have online, mobile and telephony. In our telephony we have 2 types of telephony, 2 telephone numbers. We have 1 telephone number for if you want to speak to a real person. And they're based in Earls Court, Sutton and Boreham Wood. Or we have an automated system, of course, but it's up to the customer. And customer choice will be something we'll be talking about as we go through this presentation a little more. Our online, we are just in the middle of a significant upgrade. We basically rewired the bank. I'll talk a little bit about that as we go on. But of course, we have all channels. And my view is this is about giving customer choice and about tangible delivery at any point of sale. How do you create tangible delivery at point of sale? You know, Amazon interestingly said the hardest yard is the last yard, and therefore they've just opened a store in Seattle. I think we can all assume that Amazon are pretty good online, yet they're opening stores. And they're approaching people like Metrobank about can we put some lockers into your stores, because that last yard's really hurting them. Apple have the highest revenue per square foot globally for their retail stores. The highest revenue per square foot globally. The last yard is the yard where the rubber hits the road. And for me, therefore, what we're trying to do is make sure that through every channel we tangibly deliver. So we were the first company, I believe globally, to produce contactless chip and PIN cards at point of sale for new and existing customers. So when you walk in, 89% of customers within 30 minutes have their account set up end-to-end, card printed, and they select their own PIN number, and it's their permanent card. If they lose their card, they can pop into any store, any time, any day of the week, and it takes around 7 minutes to get your new card in your hand. We're developing at the moment. We're going to be throwing away our mobile app. Our mobile app is adequate, is the way I'll describe it, and we're currently going through a new service integration to launch Our new mobile app's on HTML5 using a company called Backbase as our front end. On that, you'll then be able to go through click and collect, and you'll be able to go on and say, I've lost my card, can you either post it to me, or can I pop in the store and collect it from this store at this time? And it'll be ready waiting for you. 15 minutes time. So I must admit, that's an Argos thing. I think Argos are brilliant. I've got spent a little bit of time visiting them, learning so much from Argos and Duke John Lewis. It's that retail concept of moving data around so that whatever channel the customer wants to interact with you, they can have point of sale delivery. And the point of sale is the customer's choice. So to me, we are 7-day store opening, that's what people focus on, but that's one of the tangible ways in which we deliver to companies. It's how you integrate the whole technology stack to give the customer a choice of how they want to consume the services you offer. We are deposit funded, we have no wholesale funding. We are a very old traditional bank. For every £100 I raise in deposits from my customers, I'd like to lend £80 out. Today I'm at £71 in lending. That will grow to 75 by the end of next year and 85 the year after. Very stable, very low risk model therefore, and that's what we're about. Good old-fashioned management of a bank, we believe can make money in doing that. We do not offer wealth, we do not offer asset management, we do not offer insurance broking. There are better people out there, but I'm a bloody good banker. I prove that I'm not a good wealth manager as I still have RBS shares, which sums it up. I need say no more. So I like people to talk to other people. What that's meant is in our deposit funding and the way we think, we've got a fantastic relationship with wealth managers, asset managers, because they see us as complementary rather than competition. And in that way, I can grow faster by driving down the complexity for my management team. I can drive the growth up because I have the asset managers and the wealth managers wanting to introduce their clients to me and their business to me, because I complement and only want to serve their customers, not steal. We say no legacy, of course I have legacy. I set myself up, we opened the doors, gosh, 4 of us to 2069 now. If you're 5 years old, you have legacy. My view is once you've launched something, it's legacy. The minute it goes live, it is old. Because technology moves so fast, somebody else is developing something that's going to go past you tomorrow. So we do have legacy, of course, but we have no legacy issues with regulators, no reputational issues, no credit issues. I have no mortgages that are 30 days down, nothing. I have 3 loans that have gone bad that I'm managing through workout. I know them all personally now, and that's in a lending book of £3.5 billion. We are very low risk. Because to me, through the cycle, if I keep my cost of deposits at the right place, I can build a long-term, sustainable, low-risk bank that will kick off franchise growth that people will pay a high multiple for. And that's what this is about. Actually, this slide's wrong now. We're actually 45% consumer, 55% business. I've been surprised by how much businesses really take this to their heart. I shouldn't be surprised, you know. One would say, you know, the SME market is probably the most unserved market in the UK, and it's where we're making the greatest strides. And I'm really excited for some of the stuff we'll be doing next year. And then we've got actually over 640,000 accounts now. I wish I had a little clock there and you could see it moving in real time, because we'll be opening accounts as we sit here now. We open about 1,000 accounts a day now, in store, not online. People walk in to open their accounts with us. And that actually, the reason why I've been doing that is so I can control growth. I think if you just open online and go, ta-da! If you get hit hard, you've got to make sure you can support that infrastructure. I'm about service. I know today I will do between 950 and 1,050 accounts. I know I'm structured for that, I know I can build a service model for that, I know the costs associated with it. And therefore I can manage my delivery. And that's really important if you're a service offering. I cannot afford to overgrow and lose my USPs. But we will next year. Like I said, we've just changed our car provider, our hosting provider. We've just gone Microsoft in the cloud, full document stack, full integrated stack, sorry, out of Amsterdam and Shannon, all integrated through our enterprise service bus, and we'll be rolling out our new cash management in April, our new public website in May, and our new mobile offerings in July next year. All in the Agile Sprint approach is what they tell me. You'll know more about that sort of stuff than me. I know enough to be dangerous. My degree was technology. My first job out of university was in research and development at BT. And then my best mate was earning £3 more than me for Barclays and a Coppers application form and standing for interview today as a banker. But very much not a career choice. I actually don't know what I want to do yet when I grow up. So we have over 640,000 customers now, growing at about 1,000 a day. We have 39 stores now. I do apologise, I've given you these numbers anyway. We are growing fast. By the way, all the numbers I give you are net. I don't talk gross numbers. It's not worth it. You know, I love one of my competitors, or one of the organisations that I should consider as a competitor, always talk about their gross numbers. And they said they'd grown by 9% of the switching market. What they didn't tell you was they lost 13%. It's really interesting in banking how everybody talks gross. Gross is just a cost, net is where you're making money. But gross is how you talk big numbers, and you know, it's really interesting. We've got to get under the skin of that and have proper conversations. We opened our 40th store in Maidstone on the 11th of December. The plan is to grow to around about 100 to 120 by the end of 2020. We did say it would be 200. So why am I halving the number? 2 reasons. My stores are trading at about 3 times that which I expected when we set the bank up. I would call that a high quality problem. When we set the bank up, I expected to be winning between 1.5 and 2 million per store per month in deposits. We're currently trading at around 5.5 to 6 million per store per month. Cost of deposits around 80 bips. So much, much lower than most of my competitors, which allows me then to lend low down the risk curve and make the same yield return. So because the stores are overperforming so much, because stores are actually quite hard to find, I want the right sites. Got to get the right sites. And because I'm spending so much more on technology and infrastructure as you'd expect, that's why we're moving towards 100 to 120 stores. Deloitte did a piece of research called Bricks and Clicks. I don't know if you've seen it. In that, they assume that big banks need to get to between 450 to 600 to serve the UK. I think they're wrong. I think you need between 250 and 350. And I think the delta is because they've got marginal stores that you wouldn't close, but they're marginal stores that I would. And everybody goes, why are you opening stores when everybody else is shutting them? We're all driving towards the same place. I want national coverage. To get national coverage now, actually people live in conurbations, so you don't need to be in every town or village, you just need to be in the right conurbations in the right place. And that's how people have to change their thinking, because you don't need the 2,000 stores, we know that. I don't think you need the 650. What you need is the right conurbation thinking. You know, I'm a lad from the northeast, Pitt Village in the northeast. I don't want a bank in the village I grew up in. If you had a bank in the right corner in Sunderland, Newcastle, Darlington, Hartlepool, you nail it. You don't need to be, because of the way people live and work now and play. I have a friend who lives in Huddersfield, well, he actually lives in Holmfirth, works in Wakefield, goes shopping in Leeds. You know, that's how people live and work now. Family live in Bristol, Cardiff, work in Bristol, shop in Bath for Christmas. That's the way we are now, and that's how you need to think about conurbation living. So I want the grow and attack by conurbation, 250 to 350 stores, but with the full infrastructure service offering to allow customers to choose how they want to interact with it. Give the customer power. And that's why we grow. So where are we now? We are growing responsibly. We're going to be over 5 billion deposits at the end of the year. So we start the year at about 2.8 billion, we'll finish at about 5.1 billion. Reasonable growth. My lending started at 1.5 billion, we're going to finish at about 3.5 billion. Reasonable growth. And this is what I would consider to be low risk growth, because of my cost of funds, it allows me to play in the markets where I would expect lower losses. And therefore what I'm trying to build is a model that works through the cycles, not booming up now to have bad losses later on. And that's what my investors pay for. What do people say? We get reasonably good responses. I'm really pleased. The press have been very kind to us. I am a tight northerner. Last year I spent less than £100,000 on advertising when we doubled the size of the business. So far this year I've spent less than £60,000 on advertising. If they say 50% of all advertising is wasted, I think in banking, because nobody trusts us, it's probably closer to 90% is wasted. And therefore I'd rather spend money on driving my Net Promoter Score and investing in technology and in training my people than in advertising. My Net Promoter Score is currently running at 80%, 80. Several of my competitors, one of my competitors that I don't want to knock them because it would be too easy and it would be wrong. said that they had an industry-leading 16%. One of my other competitors said that they were proud that they'd gone from -3 to +1 in the last quarterly, and they've just spent 30 million on advertising. Well, I've spent 30 million on technology and training, and I've got an NPS of 80%. So we say it's about creating fans. It's about us creating fans so that they go out and tell their friends they should bank with me. And over 62% of all people who come to us now come to us through recommendation of a friend or family member. And that's how we grow. I don't want to win customers through advertising. I want to win customers through their friends and family telling them I'm bloody good, and then me having to deliver it. My mobile apps are adequate. We're growing as well. I've made mistakes. Christ, if I made mistakes, and if you want to get onto them, we'll need to book the room longer. but we're pretty good at learning and apologising. We care and we want to do it right. And that's really important, I think, that as you grow, you have a level of humbleness and honesty to know you can't be perfect, but by God, you can aspire to be. So I'm really pleased. We use PR a lot. I am a PR tart. I accept it wholly that I am. We obviously we placed a story in the FT yesterday around Capital. You know what I'm doing there, it's pretty obvious. We worked hard. It's my job. My job is to have Metrobank seen in the right places. I like the FT commenting and using us as a thought leader on commentary, because what I do is I take this sort of brash bank and I'm placing it in the thought leadership, and I'm creating opportunities for us with the Treasury to be seen as a long-term sort of leader. And that's how I want to take Metrobank forward. I'm 43. I've been there 7 years. I certainly don't see where I'd go from here. So I need to make this one work. And I'm proud of things like this. It's we've got the news but which bank offers the best service? The top overall score went to Metrobank. That was in the Times, done by Fairer Finance. And look, when you get stuff like that, that made my cornflakes feel tastier on a Sunday morning when I opened the Times for that one. I must admit, I have had some moments where obviously my cornflakes have turned sour, and that's life in banking. But this is the sort of thing that comes out. We're #1 from Fairer Finance, 72%. I'm trying to get the big banks on, but I wouldn't have been able to read it because I have too many on the list, so I do apologise.
Okay, you get other banks starting to use
yes.
big money. How are you comparing? How you do with those?
The new startups.
Other new startups and the effect they represent.
So it's really interesting because I think there's a lot of different models out there, which is great. I think what we don't need is more Me Too. And I see the carve-outs going on of other organisations. Why the hell do we need more Me Too's? Do we need another RBS? Do we need another Lloyds? I would suggest to you the answer is no. So I don't see the Me Too's as competition. I see them as big banks sitting on legacy platforms going through the same stuff. I therefore feel for Paul and for the chap who must be running. I don't know who runs Williams and Lilly also. I used to know John Monkey, but I don't know either. So, their part. You've then got people like Aldermore, Shawbrook, One Savings. All good guys. Steve Pegman going to Shawbrook. You've got Philip at Aldermore. You've got Andy Goulding in One Savings, really good guys. I really like them. They've raised deposits online. They then lend through brokers further up the risk curve. I think they're very good models, but very different models to my own. I'm a cash management, win the current account, grow the relationship. There, get the deposits and lend up the lending curve. I'm a do the cash management, win cheap deposits through service, lend lower down the risk curve. I hardly ever see Aldermore, Shawbrook and One Savings any of the deals I'm involved in, because we play in very different markets. They are growing brilliantly well, they're doing a great job, but we're just very different models in different markets. Because they don't offer cash management, where for me cash management is the core of what I do, both for retail and commercial. So biggest customer I can't say, but the most publicised one, we bank the American Embassy. So I lend money to the American government, which is neat. We bank 1,000 staff there. We have the ambassador, the 23 agencies. We get phone calls sometimes saying we're sending a suitcase across, can put £250,000 of used notes in a suitcase. Then we let the soccer know that we've spoken to the drug enforcement agency, and then we wait for the papers to come up with something. But so we bank people like that through cash management. Therefore, I pay zero on that. 28% of my deposits are at 0% from my current account through service offerings. Whereas the guys I've just spoken about would be online raising money at 2%, 2.5%. So I think in the last published accounts, most of those guys had cost of deposits around 2.5, and I'm at 8 bips. And therefore that's why I can lend further down the curve to get the return. But that's cost of service that I'm offering. It's just different business models, which is good. We need less Me Too and more different business models. You've then got Tesco Virgin. I can't comment on Virgin stores because they don't. I need to see how that strategy develops. You know, they inherited that the Northern Rock purchase. They're normally secondary sites, way off pitch, quite small, with different technology to that that's online. So I don't know how that's going to mature. And Jane Ann, again, a good lady, she'll make it happen. But they raise deposits online, they lend mortgages through brokers, and they've got their credit cards at 37 months interest free. So that's an interesting model. And Tesco very similar. Who have I missed? Sainsbury's don't do cash management, raise deposits online, lend unsecured. They're around 3.5%, but their risk analytics are very good. Handelsbanken, really good organisation. Don't do much cash management, not really trying to win the cash, and much more into the lending, but do it really well. So you've got different models there. Actually, the guys I normally compete against is the big high street banks, because of where I play lower down the risk curve in cash management. Is that okay?
Yeah.
Oh, then let's go to the topical one, Adam Bank BBVA. Let's see how it goes. I think the front end they're talking about looks superb. I hear great things about it. I think that it's a great idea. I worry about Generation Y's amount. If you can't charge them a fee, and they don't have much in deposits because they're Generation Y, let's face facts, we're supporting most of them through university still, then how are you going to raise the deposits to do the lending to earn the return to then keep it going? So it'll be interesting to see how that model migrates over time. But to me, I think you need to offer all channels to everybody. Of course you've got to get a great mobile offering. You need a great mobile offering. But actually, I can give you a card in your hand if you lose the card. How do you do that if you digital only? We were working last year, 14,500 school children went through my financial education program because my stores work in the local communities to deepen relationships. We did over 2,000 community events. This year we're going to have over 21,000 school children go through our financial education program. It's part of the national curriculum we've developed it. We go and work with schools to do it. I'm part of communities. That's what I want to be. How do I do that if I'm just digital? How can I be relevant to the communities I serve?
So you're going in at grassroots?
At all levels, yeah.
Have the big banks start to react to you and those powers?
Good question. Sorry, can you hear the questions? Is it all right if I... The question was how the big banks responded. They all look for the silver bullet. Because we offer free coin counting in store. It's animated. If you guess within £2, the kids win prizes. My kids come every month. We do a 5 for 5 club. So if you pay in 5 months in a row, or 6 months, we put £5 in your account. It's to help kids start safe, and also to bring people in the store. So free coin counting, animated. If you guess within £2 with the animation, kids win prizes. Tick. Go to Chiswick on Saturday morning, store crammed with dads and prams and dogs, all coming in after being a bit of patisserie to give them a rest. Right, that's what I want. Things like that, those machines cost me £13,000 a machine. I charged nothing for it. While I worked at RBS, if I had gone to the board and said, I've got a really great idea, we're going to put a £13,000 machine into every store, it's going to cost 92p per transaction on average to service it. Great, how much are we going to make from it? No, it's a loss. It's just so we deepen the relationship with customers and help young people save, so we create financial education. Yeah, but how much are we going to make from it? No, we're not. We're doing it because it's the right thing. Can you imagine how long my career would have lasted? So that's what we're up against. It's cultural differences. All of the big banks are looking for. NatWest across the road, I was talking to the store manager there, she's a good lady. And she was told they have to open at 8:30 now to compete. But she's got to do it with the same staff. And they don't open at the weekends, so she can't do rotas. The beauty with me is my rotas start from 7:30 and finish at 8:30, 7 days a week. So I can rota staff to be in around core hours when I need them. And then they can go home. She can't do that because they're all on 8 hours and they open at 8:30, they should at 5:30. She's got no flexibility. So they haven't thought about it again. And she's got the same cost base. So all she's now done is stretched her staff. She's creating poor service because her staff are more disillusioned. And it's helpful, not hindering. Barclays tried to copy the printing in store. They've rolled out card printing for existing customers into 200 stores. But you've got to phone up the day before. You've got to be an existing customer. You've got to find one of the stores. And if you lose your card on a Friday, you can't get a new one on Monday. That's really helpful. So everybody's sort of, they're looking for silver bullets, and there isn't one. Because it's about culture and how you think about what you do. It's about how you create a culture focused on the customer. It's like, has anybody ever left a card behind a bar in this room? Thank you for your honesty. One or two of you said yes. I think the rest of you are liars. So, I own my developers. I think owning your developers is key these days. Those that have the developers will win. I want to outsource the data center management. I want to outsource, but anything that touches a customer, I want to own. So David Couture, one of my developers, this is his story, not mine. Payday, 21st of the month. He's meeting some of the lads down in the store in Holborn, because all my developers sit in Holborn, about 50 yards from me, so I can go and play. And you've got to create some fun for yourself. And he's in the store, and he heard a woman say, "Oh, I've lost my card. Can I get a new card printed, please?" "Yes, of course, you can. Let me go and print it." And while it was being printed, the lady came back, the server lady, and she said, "So, how did you lose your card?" She went, "Well, I'm not really sure if I have lost my card, but I dare take the chance. So, you know, I might have left it at home, I might have dropped it, I just cannot find it and I don't want to take the chance, so can you cancel it?" She said, "It's a real pain though, because, you know, I've got my iTunes, John Lewis, Amazon, McCurry House, they're all linked now to the card. 5 years ago you wouldn't have done that, but if you think about it these days, everything's linked to that card. And when you cancel it, it's a nightmare." So David said, about 2 days later he came and said, "Listen to this thing," and when we have a fortnightly, what we call sprints, where we just get people together with ideas and say, "Shall we try a sprint to change things?" And he said, "I can develop a freeze and unfreeze button on the mobile app, so that if you're not sure if you've lost your card or not, you can just freeze your card, and then when you find it, you can just open it up again." So we have that now on our mobile app. It costs us £2,500. That's culture. That's somebody focused on the customer and listening. Now, I'm happy to go to the pub with his mates, it was payday, I accept. But that's so important. If I outsource my developers and my research, how do I come up with ideas like that? And also, how do I implement them? So we were the first people, I believe, if I serve a copy of us at the moment, to launch it in the States, where you can freeze and unfreeze your card. I tried it once with my wife when we were out shopping. It was a mistake. I soon learned the errors of my way, but it works. But it's things like that people can't, they can copy, but they can't come up with, because they're trying to monetize it. I'm trying to make my customers' lives easier, so I create a fan, where they can make a profit out of the customer, make each customer more profitable. Just a fundamentally different mindset. How can I deepen the relationship so that customer introduces more people to me because they're a fan? Where the banks are thinking, how can I monetize that person to make more money out of them? I bet they would never have launched freeze and unfreeze because they wouldn't see a value in it. Does that? Yeah. So, is that okay? If I move on, keep shouting out, please. Please ask me.